Good evening, everyone. I hope you had a good weekend so far. We're going to look at a stock called the GoToPeople, or GO2, and have a look at what caused this meteoric rise. Now, these guys rose from 2.1 cents to 7.6 cents in 2 days, and we're going to speculate over what could have caused that based on the announcement that came out. Now, these guys, before we dive right into that, let's have a look at the Appendix 3B and cover the basics. These guys have 236 million shares, which is a perfect amount to have. Now, it's low enough that if you buy into a stock that has this many shares, that it's easier to get out. Now, there's going to be enough on the buy side for you to exit your position if it goes against you. But it's also low enough that you're not going to have a problem in terms of causing momentum. So if you buy into a stock that looks like this, so let's say 236 million shares, there's not going to be too much on the sell side. You might have, let's say at 2.1 cents, you'll have $3,000 lined up. And it doesn't take much money to push it to 2.2, then 2.3, 2.4. You're not going to have big $100,000 sell side stacks. You might have 8 or 10,000 as a wall, and then it won't take much money to push it up. And that's what causes these kinds of momentum pushes on microcap stocks like this. You can see here on the 3-minute chart, the initial pump up really didn't take much in terms of volume, and the same people that bought in exited very quickly in these 3 candles here. And then the stock scanners might have picked up on the fact that this rose 100%, got people's attention, got them reading the document, and then a slow rise all the way up into the second day and traded and closed at, or rather it went to a peak of 7.7 cents. So these guys, based on 236 million shares, at the low end it was sitting at 4.8 million market cap. At the top end there at 7.7 cents, it was sitting at just under $18 million market cap. Now let's have a look at what might have caused these moves. We can see here it's got 8 million in terms of revenue, which is fine. And then after operating expenses, they sit at 728K cash flow positive after operating expenses, which is a really good position to be in. Now, a lot of micro caps don't actually have revenue, like of any kind whatsoever. And those that do typically aren't cash flow positive. So one could have simply traded this just because they were cash flow positive and nothing else. One could easily have traded this based on just that. And I think a lot of people would have. Someone messaged me on Twitter and told me about it before it went to market open, but unfortunately I was sleeping because I was trading the US session the night before, and I kind of missed out on this one. And their justification for buying the stock was purely that it was a cash flow positive micro cap. If you shop around, look at other quarterly financials of stocks that are under $50 million, and you'll see just how few are cash flow positive. This is a really good situation to be in for a speculative stock. Now, if we scroll down, we can see there's not much really interesting here. They're paying back debts here for the quarter. That's fine. They sit on $775,000 in cash. That's what they've got left. And that might seem a little bit low. You might be afraid of capital raising, but keep in mind they are cash flow positive, so it probably wouldn't have been too much of a concern. And if you scroll down a little bit further, you'd see they have financing facilities of $15.5 million, of which they have $12 million left. Now, I don't think there's a real possibility of a capital raising when they have access to so much money. So if you were trading this a few days ago, you would have felt pretty comfortable that a capital raise was not going to come. Now, if you guys want to learn how to read financial documents or skim them just really quickly during these reporting seasons, check out my video called ASX Tips Number 1. It's the very first video I ever made because I believe finance and understanding the financial documentation is the single most important thing anyone should ever learn if they're trading the markets. It should be the very first thing you learn. It's not difficult, it's not complicated. Just put in the effort and you'll have a better understanding of the markets. Now, we can see on the balance sheet here that these guys don't have much in terms of equity. At least they're positive, right? They're sitting at $62,000 of equity. So they're sitting at 8.4 mil assets, 8.6 liability, and really they end up with a net position of 62K, which means if they sold their business today, it'll be worth $62,000, which is obviously not a lot. But this is a positive equity situation here. So a lot of micro caps would be sitting in the negatives, or they'd be basically near zero. So this is okay from an equity perspective. People wouldn't have been trading this based on its equity. Now, it might have not have pushed up as hard if the equity was in the negatives. Let's say they've got maybe negative 20 million or something like that. I mean, there are a lot of dog stocks out there because this is the speculative end. This is the dog end of the market. So it's pure gambling effectively. But if you can catch these kinds of announcements and you learn to read financial documents, then you can ride the wave. So that really is it. We've got a spec stock sitting at 4.8 mil with 278K in terms of cash flow positive position. And mind you, that's for the quarter. That's not for the year, that's for the quarter. So times that by 4, and you've got some kind of estimate of, let's say, 2.8 million cash flow positive for a 4.8 million stock. Perfect. Now it's not easy to value a company. So these guys might have been sitting at 4.8 mil down here at 2 cents. And that, to me, appeared undervalued, quite undervalued for a cash flow positive stock like this, particularly one that's pulling in 2.8 mil, sorry. But I also don't agree that it ever should have hit 7.7, which is an 18 mil market cap. Now it's hard to judge. You can't just go, right, well, here's the Appendix 4C, here's their equity. What should their share price be? It's not that simple. This is the speculative end, so it can swing quite wildly. But one can say that, 4.8 might have been undervalued, 17 might be overvalued. And then, work with some technical analysis and find out what a good sell point is. I mean, there's a lot of strategies on how to trade this, but I do think this initial move was pretty excessive. I don't think if I traded this at the time, I would have ever gone beyond 5 cents. It's just well out of a reasonable price range, in my opinion. Now, guys, if you found this video helpful, then please do hit the subscribe button over there. It really helps me out. And if you're interested in supporting this content, I have a Patreon page at ASX Tutorials, and I have a tier there if you want to join my Discord. Otherwise, that's it for tonight. Have a good one, guys.